Hey everybody, it's been a long time since I did a video. Really excited to get back to talk with you guys. Slow down a little bit to my own day to day, so just want to basically talk about my thoughts about where I'm at with my tenant investment, a little bit on the market, and just kind of where we stand as of today. So, CPI is going to come out this week. Really, we need to see a print in the 7% range or lower. Another print 8% or higher, and it won't be fun for anybody in the markets. Really, for the market to believe that the Fed could pull back on rate hikes or even pause them in the near future, it needs to see a good print. So until we get that, things are just going to continue to be tough out there. Earning seasons is also upon us, and that's going to give us exactly where companies are at fundamentally, as well as how they're viewing in the next few months. These two things are going to set a trend in the market for the next quarter. It'll be extremely hard for any company, including Tenet, to perform if we have a bad earning seasons and a high CPI. So basically, the fact of the matter is that we're in a market cycle where it's extremely hard for companies to trade off their own fundamentals and valuations. And so that's been hit really, really hard in most companies. There's some upside potential if, say, a company was to come out and have blowout earnings or extremely good news. As we saw a big jump in marijuana stocks after Biden's commentary last week. So we do know things can move upwards, but it's hard to sustain without a big improvement in macro, as things are kind of pulled back from there quite a bit in those as well. Now to Tenant, we've had a lot happen since our last talk. We've had Q2 earnings, a couple Form 7s, some news, and some latest interviews with Johnson, as well as the prospectus coming out. So where am I after processing all this information we received lately? Well, obviously we've come down since the run up prior to earnings, as well as the added pressure from the prospectus. And then earnings weren't quite as good as everyone hoped or expected, myself included. I was thinking we would be above 40 million with slightly better margins, but with the closures in China during the time, it's apparent that was too optimistic. EBITDA was also negative, but that was not surprising for myself. I was not anticipating good EBITDA numbers or even net income. However, some optimisms that we did see, there was some insight that we could be around the 20 million run rate for the company per month going forward for their current operations. So if they were to fire all cylinders and there was no lockdowns, theoretically, that's what we could see. So that being said, let's look ahead, not backwards. So looking ahead, we've had now 5 quarters around 30 million in revenue, and it feels about the time the company could show a leap in numbers. The August Form 7, they mentioned normal operations in July and back to expansion in August, which is good. We've had numerous mentions of the I-3060 platform and the clean tech vertical in the Form 7s. And now they've mentioned a first order for a substantial project after performing some partnerships with large companies and the pilots. So this lines up well for Q3, as it was when it was communicated that it would come online in the form of revenues. So it should be mentioned that they've been criticized often on missed timelines. They didn't miss on this. Also significant is the latest news where they have full control of their Union Fleet platform. This could help across their whole ecosystem in regard to the platform fees themselves, also loans, supply chain services, and insurance offerings. So this one kind of deal definitely helps them in all aspects of their business. Q3 could very well show huge increased revenues to the company, the increased margins that we've been looking for. Hopefully getting closer to 20% and possibly positive EBITDA. However, I'm still not expecting that for Q3 either, due to the capex that they're currently spending in the preparation for the Canadian hub, as that number is probably going to increase over Q2 as well. So yeah, looking at the chart, obviously, we've got some catching up to do. Let's put it that way. So year to date, we're down, basically 84.6%. Looking back, on the 3 year, we're pretty well flat with where we were at 3 years ago. And going back 5 years, we're up slightly, 12.22%, 3-year were 1%. So, we basically erased off this whole peak in here where, the company had their great run up through 2020 and 2021. So really, it's a period that we should be looking forward and not backwards in the company. Not look at what's happened, but at what they're going to achieve and what they're trying to do. So Johnson and Golden are rightfully, as I mentioned before, super excited about the launch of the Canadian hub, tying everything together. I think we just need to focus on that and keep that in mind and look at how they're preparing themselves to hit these new milestones that the company is setting for themselves. So basically, onto the hub, they've stated a few times the goal is to have a November launch and have revenues from this year. We had a news release back in September where they stated 1,100 total pre-registrations, which was their objective for the start of the launch, which was announced to be November 30th. However, we do know, and big shout out to the Pioneer Market guys for some good info here. They had a great interview there last week. We know now they have at least 2,000 pre-registers at the Canadian hub, and they're now targeting 4K by launch, which would be pretty amazing if they could pull that off. I do think they can make it happen if they say they are. And November is going to be an exciting month as we get updates on the launch. So expecting to see something through their social media platforms for updating us, or maybe some news releases as they hit certain milestone numbers, let's say, right? So onto the capital market side of things with the prospectus, valuations, dilution, the uplist. So the prospectus has quite a few people disappointed due to the timing, the increased dilution that we're potentially going to see, and the significant impacts to the share price. But this shouldn't be a surprise to anybody that's been around for a while. Stocks often sell off due to shareholders accessing that capital to enter the offering, and then they get that free warrant that goes along with it. One thing we tend to see once these close is return to normalcy for the stock as it gets bought back up again, as the increased selling pressure does subside, and those who were unable to enter or maybe not get as many shares as they would like then needs to buy in the open market. We also know there's been many changes with Tenant at the board level, as well as general counsel did lead to delays with filing along with the translations required. But while it would have been better for the prospectus to happen at a higher share price, we should keep in mind the current macro environment and the challenges Tenant has had to navigate the last 12 months. I'm fairly confident that they are making the correct decisions to advance the business. And we also know they've been in contact with the SEC, TSX in regards to the uplist. They've been during these AMF investigations and all these changes for position themselves from the new hub. These all affect the timing of these things. And at the end of the day, had the SEC issue not occurred last year as it did, they probably would have had access to the tens of millions of financing and a much better share price as well. So yeah, as I said before, choose and look forward and not backwards on this stuff. So now into the uplist. So the PCAOB reached a preliminary agreement with China. That was an important step for the company to trade on the NASDAQ and the US exchanges. So that was a key thing that happened so that was a key thing that we got in the August report. Then the report we just got for September, they basically made these comments here. So along with the work done on the prospectus during the period, the issuer's management prepared the issuer's application to have the securities listed on the Canadian Senior Exchange, which we all know to be TSX, as well as responding to the SEC comments for potential reinstatement of listing on the issuer's common shares on the NASDAQ, right? So, well, this might be a little optimism from the company. It does make me think a little bit more about the relist, as I haven't been thinking much on it. But seeing them mentioned in the Form 7s back to back gives myself some more optimism as well, that we could see a relisting this year. And also, I do believe that we'll most likely see them listed on TSX before the end of the third quarter now. So whatever these two events may do for the share price remains to be seen, as we have two things challenging the company, and it's the current macro cost of capital affecting all growth company valuations and the general sentiment against Tenant right now. There is a scenario that could play out here in the next couple months should the Q3 numbers come out strong, that we could return back to a $3, $4, $5 price level. But a lot is uncertain, and that's the thing the market hates the most. So on to valuation. The current $1 share price is undervalued. I state this as a fact, whether it is or not, it's what I believe. It's due to two things I mentioned, which is the uncertainty in the prospectus. The uncertainty because investors are unsure if they'll hit guidance this year and if margins will increase. They're unsure if there's going to be more lockdowns, if the Canadian hub will be a success, and that the prospectus causing extra selling pressure on the stock. In 2 months, all this should be cleared up. The prospectus will be closed. Q3 numbers will be out, which will give us a pretty good idea if they hit the guidance. Maybe they give us a revision where they're going to revise downwards. Maybe they don't. But regardless, we'll be in the last month remaining in the year for there to be additional lockdowns that could happen in China. And we should have reports coming from Tenet on how the Canadian house has been performing. In addition, towards the middle of the month, we'll be seeing numbers from singles and doubles day, which, if it's accretive on last year's, we could land $20 million in supply chain revenues just on their own. So even if we're in a situation where, we're looking at 160, 170, 180 million this year, looking likely, regardless of the miss from previous guidance given, the year-on-year growth will still be impressive for the company. So we'll be looking to compound it on again next year and the year after. But most importantly, will more certainty in tense numbers and hopefully more certainty in the environment where inflation is waning. So the Fed has stopped raising rates and the market can begin a reprice of its gross assets at a normalized cost of capital based on their growth and margins. It's very hard to say Tenant will not be a great investment should the Canadian business hub be a success and they take that to the US next year. As even projecting out 50% year-on-year growth for the next 3 years, which is half of what they are giving us, and the risk-free rate remains high, Tenant still at these prices gives a great value proposition, along with all this other stocks available out there. So it's been great doing this little summary and recap of what's been going on. But yeah, Tenant's been doing a lot of the things that they need to do to enter the next phase of their business. So really excited. I can feel the excitement within the community for the launch of the hub, and I feel the excitement from Johnson in the interviews. So really looking forward to them finishing in the rest of the year strong, and hopefully looking to do some more videos soon. So again, if you like this video, please thumbs up, subscribe. Got some more free time. I'm done kind of my shutdown season here, so I'm going to be getting back into it and hopefully churn out regular content again. Talk to you later.